And we are we are live. Oh, I almost forgot actually. I got to do this pop out chat thing. Pop out chat. Yep, let's shrink that down. All right, guys, we're back. We are back, and I think we've got it sorted this time. So
Maybe
if you're back,
we're live, all the way live.
yeah, if you're back, thanks for coming back. I can only apologize for my amateur live streaming skills. I am still kind of pretty new to this whole thing, as you can tell. I also didn't know I had brokey Zoom either. I didn't realize you had to pay for it or any of that. But we've got it sorted. So if you could just, as always, let me know if you can hear me. And Kem, if you want to say hi, if you could confirm that we are indeed live and you guys can hear Kem as well, then we'll get right back into it, I guess.
I am live with the greatest of all time, Camel. Looking for the double thump daddy in the markets. Let me know that my microphone works. Dude, I laughed my ass off when you said that.
I don't know where it came from. It's Greg said, letting us know he can hear us. He can hear us and see us. So happy days. Yeah, sorry about that, guys, but thanks for coming back. Kem, do you want to do a quick 2-minute recap and then we'll jump right in? I'll link the video to the first live in the end of this one. Once we're done recording, I'll link the original video. So, but I think it would be useful to have a quick recap if possible.
So, brief introduction of what we were talking about in the previous stream. So I wrote these 7 chapters thus far. It's still a work in progress because things change every day. But I wrote those about 6 months ago. Didn't really know how to present them to the world. And kind of reached out to Camel, let him see them, and he's like, "Dude, go for it." He's been supportive of that ever since, so that's really cool on his part. Trying to get this message out there to start a conversation, just to kind of open your eyes to the possibilities of what these charts are telling us on the larger time frame, what could potentially be happening, and how this could be the end of an era, kind of like the collapse of the Roman civilization type of thing. I don't think it's going to be quite that bad. We're going to just end up moving global dominance kind of more towards the east, and the west is kind of going to take a back seat. And I wrote 7 chapters to kind of portray how us, the plebs, the population, how we're going to be affected by these plans, to roll out potentially a surveillance state, central bank digital currencies, or being more controlled and being happy about being controlled, which is just crazy. But yeah, I just wanted people to kind of learn how markets work. So many people that I come across just don't understand what's going on in the markets. They hear bad news and they're like, well, that means markets go down. It's like, well, actually, no, it's quite the opposite. It all has to do with liquidity, and it depends on who's holding what shares and how much capital they have to prop up the market that they're in, or whether or not they're selling their shares to get into something else. These markets are very dynamic. All we're trying to do is go along for the ride.
Yep, absolutely. And just for the sake of recap, could you show how you arrived using the fibs and the Elliott wave at the, roughly speaking, 44.5K target?
Oh, you want to jump right to there?
Oh, we can
Well,
do.
first we'll start on the quarterly and we'll work our way down. Give me
Okay,
about
sure.
I don't know, minute and a half, and we'll do that. So in the previous frame, we were talking about. Let me take a screenshot of this so I could draw on it. We're just marking market symmetry, basically matching what the market looks like. And I was kind of taking those 2 legs matching, and then I was matching this structure right there with this structure there, which for market symmetry purposes, we're in this leg to the upside. What follows is essentially 1929, and that's my assessment. Whether or not we get it, we don't know. But that's currently what I'm looking at. It is definitely possible that we just repeat this leg down to here, and we continue this, and that means more hyperinflation type of environment. I don't think that's what's happening just yet. So that's my kind of overall view in this basic markup channel. before a distribution happens. You have your accumulation. I'm expecting a distribution in this range. That's a basic Wyckoff principle. So if we were to move out in, to say a weekly chart, and this is what I've been looking at since probably for the past 3 years, when I was a little more heavy into Elliott waves, what's this? Just counting waves and doing basic trend-based fib extensions, starting in 2009 as the bottom, having a wave 1, 2, then, or no, this was 1, 2, and then this is 1, 2, 3, 4, 5 for wave 3. So then I'm going to take that measurement of wave 1 and 3 and expecting this to be a wave 4 expanding triangle, which is extremely rare in markets, and projecting from there. That gives a target of roughly 44,000 for wave 5. Tighten this up a little bit, get a 3. That would be 43. This has to be right there. And if we're getting really, really tight here, it would be 44,134 in the Dow Jones. And then more locally, since wave 4 for this expanding triangle, we would take the bottom of that to a potential wave 1, 2, 3, this being wave 4, and do the same projection, and they line up. The 618s, they line up. And that's an Elliott wave principle where wave 1 plus 3 projected from 4 should equal 618. Wave 5 should be 618 of that measurement.
So we got
fairly common trade setup.
We got a very
lower
nice
time
overlap.
frames that we do. Say that?
Yeah, we got a very nice overlap. I really like this overlap.
Yeah, it's looking like a decent setup. So that's actually my next chapter is when I was going to be kind of diving into a little bit more.
Yeah, please do.
If we were to go with the analysis of say market symmetry. So in Elliott wave, they say what starts in 5 ends in 5. And basically the way I look at market symmetry is however something starts is how it's going to finish. And look at how this wave started. That's the same thing.
Yep.
Then you got your ABC in the middle there. Chop down, chop down. I mean, it's setting up to have a very completed move. I do believe we have the relative strength index is diverging on like a quarterly chart, monthly chart. We're getting divergences showing up. So it stands to reason we're in distribution locally. What comes after that, you don't know. It could just come back to local support and continue back up. But something that we don't have on the chart is a weekly close lower low. So right now our weekly low, our weekly swing low is there. So if we were to get some kind of blow off up here to like 45, 52,000 maybe, or something like that, come back down, then we'll put in a nice little head and shoulders pattern and drop down to target. Then that would put in another head and shoulders pattern, you know?
Yeah. And
this would be
based on that blue squiggle, where do you think the QE bomb comes in?
Well, next cycle low would be 2027, 2028 area.
Yep.
So this is something that I'm not quite sure of, which doesn't make sense. Like, why would they wait so long unless if they were forced to somehow?
It's interesting you say that because this has been my thought with the Bitcoin left translation. It's like if Bitcoin it looks like it's left translating because it's taken out its all-time high prior to the halving. If it really is going to put in a top somewhere sometime this year before November and qualify for left translation, then everyone keeps asking me, well, why won't it just double pump, right? Surely they'll step in and print and then we'll get a double pump and it'll end up being a right translated cycle. But I don't like it's interesting you just said that because I can't reconcile what would cause. And I mean, from a cycle perspective, it's easy to explain, right? If the top comes to the left-hand side, then we have to spend longer before that next cycle low shows up. But it's interesting you say that because I can't reconcile why they would wait so long to print either.
So if you were to look at, I keep track of a lot of markets. just because I love the charts. I just love looking at them. And I was actually looking at some cybersecurity stocks in the cybersecurity index.
Oh, here we
They're
go.
looking like they're going to have a massive buy set. So this could be, blame it on China, blame it on Russia.
Cyber
Sorry, our
attacks.
system's down. We can't print money yet.
Right.
You're just going to have to stand by for the next year and a half until we get it sorted.
Oh, wow.
Yeah, that's a potential. That's really the only thing that I could see that would stop it. Otherwise, they're going to try. I think it fails, and then the real bomb comes in. But in Elliott wave theory, we should be retracing back to wave 4 of lesser degree. We should be down at this area, and that would just be before the money printing started back in 2009.
Yep.
That's your liquidity grab from this, basically this distribution range. Here's your liquidity grab. I mean, we should retrace back to the bottom of there, below that, and find resistance. Oh man, this could just, you got nothing left. But yeah, I don't know if I see that happening. But yeah, look for that to be support. I mean, anywhere in this general area, we might find support right up on top here.
What is that in percentage drawdown? Is that 80, 85%, I'm guessing? It's got to be in that neighborhood, right?
Yeah. Yeah, this would be 86% would be this low. So I've been trying to project the target for that. Let me discard the drawing and we'll get onto some, what is the measurement of that? Say we make it to target of 44, 45,000, draw down to wave 4 of lesser degree, and 83% drawdown. And that makes a target of like 7,000.
Yeah.
Let me go back to the quarterly chart and show you something interesting with regards to that. If we were to measure how far down in percentage terms this one came, project from the top, is projected around 45,000. 52 maybe.
Yep.
But the 1-to-1, comes right back down to that area, and that's wave 4, wave 1, 2, 3, 4, and then chop around for decades. That thing.
Very interesting.
Yeah, I mean, this is market symmetry. This is what I'm talking about. This is the next leg in the sequence, and then the V-shaped recovery we were talking about, and then a potential sideways distribution, and that just makes the whole chart make sense. I'd like to have data before this, but work with what you have.
Sure.
And then what would that do to people's retirement funds? What would that do to their asset allocations and overall sentiment and how they feel about things? They would be devastated. Have an 80% drawdown on the retirement account. I mean, this includes treasuries that could potentially be getting devalued. Sure. So people would be fairly desperate, and you could have civil unrest, state-sponsored violence, just to shake things up. And people will, like I said, devastated, willing to accept the solution that'll be proposed. What solution is that? The massive QE bomb that gives you the V-shaped recovery back into distribution. Until it goes into China. I mean, China looks like it wants to have a buy set up here pretty soon.
Which is wild to me.
That chart. It's a quarterly chart on the SSE composite. That's China. Mm-hmm. And that's just a consolidation triangle. This looks like it's going to break out for a wave 5.
Sure.
In the coming years, like the next decade or something like that. Mm-hmm. The target for that's got to be somewhere in the 16 to 20,000 range. Might be where capital flows. Quite possible. Scary stuff, though.
Yeah, for sure. I'm still.
Oh, and you see the Nifty?
Yeah. My thought is this thing is close to topping. I don't know about you. What do you think? I think this thing's close to topping. The Nifty.
Like the Nifty?
Yeah.
So
I'd love to know what you think about that.
24,000 was my thought based upon Tyler Jenks and his hyperwave theory.
Okay.
A trend line that I think went through here. And I talked to Socrates about this, who's the co-writer of the book on hyperwave theory, and said I just needed to not have the last line. But yeah, you have your phase 1, phase 2, with your phase 3 line, and I think we're in phase 4, but I could be mistaken. He said this line, the phase 4 line, is incorrect.
Okay.
That should have been higher, but after phase 3 line here hit what, 18,000 on the Nifty? Technically, it should be 36,000. It should double from there. I think that, no, it was this one, 12,000 target here.
Oh, this is
So
24.
I think I had this as my phase 3 line. This was my phase 4. Then you double 12,394, which equals a target of 24,000.
Sure.
And after that, according to hyperwave theory, as soon as this breaks, there's your target down 9,000 for a bounce.
Yep.
And ultimately, you end up at the phase 1 line. That would be such a bust for India.
Yeah, for sure.
And people are so hyped on that market. They're like, this is the only market worth owning. It's up so much compared to everything else. And it's like, well, yeah, that's how they trap you into thinking you're invincible.
Yeah, and that's what makes me think that, one, this is close to topping because the sentiment is reaching extremes there. And like I was saying to you in the first attempt of this live stream, that's what makes me think that the US still has quite a way to go. Because as I was saying to you before, we're seeing these the sentiment swing, right? You get a little bit of a shakeout. We've probably not even done 8% from top to bottom for the recent pullback in the US equities. And already there's fear and doom all over the place. And that just tells me that these bulls don't have the conviction yet, right? There is still probably more upside. But I see the opposite thing on the Nifty. I see this Nifty is nearly done. The sentiment is extreme. Like, it's interesting to use the hyperwave. I'm a big fan of my 3 increasing steepness angles that forms a parabola. And I think this thing is close to done. And I do wonder, it led on the way up, and I wonder if it's going to lead on the way down too.
So where's that capital going to flow? That's the thing. Is that capital is likely to flow to the U.S. Equities market, right?
Yep.
So you match this leg with this leg, got this ABC in the middle. This one, yeah, we're in the interest zone to be selling, according to the way I look at charts. And it looks like how it started is how it's finishing, and it's at the 1-to-1 now. 127 that's in that pocket.
Yep.
Invalidation for me is the 1618. If it goes beyond that, then something else is happening. Look out. But yeah, this could be topped right here. I mean, let's take a projection. Let's do it locally here. Get rid of that. Trend-based fit extension from low. Projected from a potential wave 4. Yeah, see, it's technically going to go to 26, but
what's a few thousand
so
amongst friends?
That. Let me get a weekly chart on this last leg up here. See if there's any buy setups. Yeah, look at the okay. That one doesn't match that one. I'm just looking for market symmetry here. See what's going on at a glance. I think we're going to do this leg right there. This one repeats and then it's done.
I'll be surprised if it. Oh, maybe not actually. What time frame are we on?
This is a weekly.
Oh, okay. Yeah, I think
we still have higher highs, higher lows.
We do.
Still there. So.
Yeah. But I do think.
But I would see this as a buy setup. Retest this area. Bang, blow off. Maybe.
Yep, certainly one possibility.
Or maybe they all just go at the same time, Yeah. Maybe they'll all top at the same time. I do have potential, topping idea for timing potentially in July. It depends on how, equity markets run. Let's check the S&P 5. Oh, this thing is just, same difference here. Expanding triangle 4, 1, 2, 3, 4. We're working on 5. We're just about there. My target for the S&P was only 5,700. I'm a little lower than most.
I had somewhere between 61 and 64.
I saw that today. Your post said that my blow off targets for that and that. So 618.
Yeah,
was 57.
Right in between there, right?
Yeah.
61,
It's in this
64-ish.
pocket.
Yeah, I mean,
it all worked.
Yeah, I wouldn't be surprised if I'm off a bit. I know there's some people calling for 7K. I'm not sure if we can make it that high, but I mean, never say
I think
never.
this buy setup for you in our DMs. Well, we're on a 2-day chart, S&P 500, and I've been looking at this ever since this low. I've been looking at this as an expanding, or not expanding, an ending diagonal, basically.
Okay.
So we've got the ABC here. Change color. We've got this. Then one final leg. It's colored blue. Up to 57, $6,000 maybe, something like that.
Sure.
That would just look like a 1, 2, 3, 4, 5. Complete. It should have major divergences showing up if it plays out like that. Now, that would require more of a sideways chop. And I think what you were looking for is just vertical from here.
Yeah, pretty much.
If that does that, you'd match this one with this, and then this one would just go like that.
Okay.
That would be your vertical move. And I would totally see the same thing. I would project this leg right here to get a target. Yeah. So that's where it's going. That's if it goes vertical from here. It's got to match the intensity at least of this leg.
Yep. And I think
get out of market and this is complete.
Yeah, this is what I've been looking at. This is what I've kind of been expecting. I mean, I got clear in validation, right? If we don't come tearing out of this cycle low, then and we do any kind of ranging like you just suggested before, then obviously this idea is invalidated. But if we do what I think we're going to do, and that's come swinging out of here, then like you say, it's going to get pretty wild.
Yeah, we potentially have an accumulation distribution if it goes sideways. These are just potential, wave patterns and that we look at markets to kind of give us trade setups and ideas of what is happening here. But I was looking at this, matching this. So 4,800 is my target there to buy, and then expecting up. It could just go. Could be pretty quick. The timing doesn't necessarily have to match.
Okay.
If they pass that Repo Act thing that I've been talking about with the bond market,
yeah,
oh, you're gonna have such an influx of liquidity. So to give you a background on that, the United States government they're in talks. I think they're debating it today, whether or not they're going to pass the Repo for Ukrainians Act, which is to confiscate Russian assets that are held in U.S. institutions, sell them at market, and provide liquidity to Ukraine to buy munitions to fight against Russia. So they'd be taking Russian assets to fight against Russia. Well, that would erode the confidence of the U.S. Treasury market very rapidly, and your sovereign nations would just say, I don't want to hold that. Why would I hold that? You're going to use it against me? Yeah, no thanks. So that's how many trillions are in that market? Some $70 trillion, $100 trillion in that bond market. It's the most liquid market on earth. If you have a fraction of that gets spooked, all equities around the globe, Bitcoin, gold, everything, it could have a very, very quick spike. That'll surprise everybody. And you'd be talking gold, 3,500, Bitcoin, I don't know, 180 to 220K. Your S&P 500 could be making that 6,500 to $7,000 target. It could get very, very wild if you.
I think we get $60 silver as well, no problem.
Yeah, silver is looking like it's finally waking up.
Yep. Yep. It's going to be a wild year. That's all I know. That is all I know. It's going to be wild.
Yeah. Well, it's shaping up for a wild year. I mean, we're playing in financial markets, and nobody knows. We don't know. I mean, we pretend like we know, but we don't know.
For sure. Yeah.
Yeah. So these are all just trade setups. So like once this leg is complete, um, once the move is complete, I would expect either this move to repeat coming down or something much, much worse, like 1929, like I was kind of speculating. Is it going to happen? I really don't know. I don't know. But if we do make a weekly close lower low, that would tell you that, hey, something, the behavior has changed in the market, and we need to expect the other direction. And it's similar to, like, I trade with Bitcoin a lot. Let's look up some Bitcoin. And let's look at the column-based chart. Similar to these lows here. I mean, go through the 2-day chart. How do you think your audience is? Do you think they're precious metals, Bitcoin, just general trading? What do you think?
Everything. It's a wide range.
So I mean, this is your structure is lower lows, lower highs, lower lows, lower highs until right here. That changed it. As soon as that changed it, you need to expect something different. And I trade to tell people that no, the swing high is over here. It's like, well, yeah, but the behavior has been just not giving anything, just down, 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 down until that. That's a change in behavior, and you need to be open to the idea that something different's happening. Lo and behold, higher low, higher high. By the time that happened, that's just obvious. We have higher high, higher low. This is not distribution. This is reaccumulation for markup. And we're technically still in markup until recently. We have had a lower low close on a weekly. That low is lower than that low. So we need to be open to the idea that lower high is coming in. Until that closes up here, then we can expect higher low. Then take it and go.
Yep. That's largely what I'm expecting to see. Something I've noticed about Bitcoin is it has this unique tendency. I call it the fake out failed cycle. And that is to print this sort of lower low like you just showed, but then it behaves as if it hasn't printed a lower low, right? So it's a weird nuance that it seems to be quite unique to Bitcoin. I don't really remember seeing it anywhere else, but I'm interested to know what happens from a cycle perspective. We need another 30 days, roughly speaking, for this to work out. That next cycle low could be an equal low or a higher low, but I do think we've got about a month to get through before we can actually continue this rally.
If that happens, if we don't come swinging out of the current low, then I would be looking at what happened last summer as repeating. Like right now, this is looking pretty decent for a repeat right here. This is log scale, by the way, not linear scale.
Yep.
So it might not show the same on your chart. So if we get a little 3-wave up here, 69 or something like that, and then roll over again, I mean, that's going to mimic exactly what we did down here. So this would be the reaccumulation. This would be your distribution. And then I would only expect for the cycle, for the entire cycle, target of 125, if that happens. If we come out swinging out of here, like if we close up here, then I would look at this ABC up like that. And then this leg would repeat from right here. We'd just go. And you're talking 180.
Yeah.
180K or something like that. Very, very quickly.
Yeah.
Take it one day at a time. We don't know. We just trade setups and have your invalidation.
Sure.
Match this leg. I mean, you just take it down to the 1-to-1. That's roughly 57,000, I think. Invalidation would be, I had to guess, 49. I haven't measured the invalidation for that yet because we're not there. It looks valid to me until it's not. invalidation of this idea playing out would be breaking above here and even just taking liquidity. And guys, if you are trading Bitcoin, watch the liquidity. There's a lot of orders up here, stop losses. The market maker is going to have to reverse those and dump those off before continuing. So don't think you're just going to long the breakout and it's going to run. It would need to grab liquidity, pull back, and then break it again. But likely it comes back down and shakes everybody out again and then goes if it wants to do that.
Yeah, this is what I'm thinking. This is why I'm saying there's I think we got to make another cycle low in around 30 days. I'm pretty sure we need to see that in one form or another, whether it's a lower low like you showed earlier with the left-hand side of the chart repeating, or whether, like you said, it runs the liquidity from the top and then pulls it back and then goes. But I do think that we've got a little bit more chop in here before we can get away from it. Do you have any idea what's caused the top, or I should say a new all-time high before the halving? Do you have any idea, based on your Elliott wave stuff, as to why we can do this, why we're ahead of schedule, so to speak?
Yeah, because nobody expected it. That's basically all it is. So, I mean, I follow the sentiment quite a bit, and I'm in Discord. I have trading groups that I associate with. Some of them I lead. Some of them I just help out with. But basically, people were looking at this as this is the distribution, and we're going to go back and finally hit my 12K target. It's like, well, no, the market's not going to give you your optimum entry.
Yeah.
So then I wanted this to come up here and come back and back test. Guess what? It didn't give that to me. So I had to take this trade here up to there for a day trading investment. Yeah, I'm long as all hell, but until invalidation. But why did the market make a new all-time high before halving? Because everybody was calling for, oh, here comes the pre-halving consolidation back down to 30. Yeah, sorry, no, we're going to go up here and we're going to sell to you because you're going to want the halving. And then we'll see. That can be the distribution. It totally can. In Elliott wave terms, 1, 2, 3, expanded flat 4, extended 5th. So if that is the case, you would look for a 0.6 retrace, 6.8 retrace of this minimum. I think get you to 52, if that's indeed what's happening. This can be complete right here, and that's all you get. And then this move is about to go right up to there. No stop, no pullbacks, and it just goes. And you need to be ready for that. It'll do what it'll do.
Sure.
I mean, it's got the halving. People are expecting, 2025 standard cycle top.
Yeah, they're not getting that,
possible.
In my opinion.
Well, somebody was telling me this like 2 weeks ago in the trading group. Like we're pre-halving. I'm going to buy the halving dump. It's going to dump into the halving down to 50 something.
Yeah.
And I was like, where in this entire move up, where has that played like any previous cycle? It is not doing what it's been doing. Why? Because everybody's used to it.
Yeah.
We traded what was doing before. We traded that in 2021.
Yeah.
Now everybody's expecting, we need lower. Nope, we need higher. Higher again. You can't get in. You can't get in. There's no pullbacks. We're just going to keep pushing and pushing until the bears capitulate and say, you know what? I got this dead wrong. Bitcoin's $250,000 now. Sorry, I guess it's going to $1 million, huh? Buy the pullbacks. So the market maker, or the whales, or whatever you want to call them, they want liquidity to sell into if they do indeed want to get out of their position. So if they do mark it up to here, you're going to have nothing but buying the pullbacks. So the people that have a lot of hundreds of billions of dollars worth of this stuff, they can't just sell here. The price would dump to here, too much slippage.
Yeah.
If they push it up here, you got dip buyers, dip buyers, dip buyers, dip buyers. Oh, ran out of dip buyers. Sorry.
Sure.
We deal with it in markets all the time, on all time frames too. That's the thing.
Yeah.
Like price action is fractal, and it repeats over and over everywhere.
And so, if I can pull you back to maybe chapter 2?
Yeah. Chapter 2. That is, I think, the depiction of the Wyckoff method.
Yeah. Can we, just for the sake of anyone, or just for having this as a standalone piece, can we just recap chapter 2? Because I think that fits with what you were just talking about with this whole run it hot and then distribute it to the dip buyers. Can we go over that with the Dow Jones and set the scene for chapter 3?
Ooh. I like your thinking. So reset tab. AI. We do that on a quarterly chart. These are high time frame charts, but what's the strongest economy in the world? Strongest economy of the world currently is the U.S. The U.S. is unstoppable with all the innovation and the AI and whatever. And what do you have? You push up markets so high that you can sell into them. If you were to sell here, you'd only get that for your stuff, and you'd drop. But the same thing that I was just explaining with Bitcoin. You push up this market into a parabola. That's just so much excitement. People are looking at their portfolios every day, and they're like, "Oh, I'm just crushing it, idiot." And whoever's got hundreds of billions of dollars, the shareholders like Jeff Bezos, Tesla dude, Elon Musk, they've got to sell into people that want to buy. They need willing buyers in order to sell into. If they were to just sell, there's no liquidity for them, and it just tanks the price.
Yeah.
So to get optimum prices for their stuff, run it up a little bit. You spend a little bit of money, push it up, then you got dip buyers up in the highs, and you could sell all you want till it falls off.
Yep. Just like you were saying with Bitcoin.
Evil. Yeah, exactly. With Bitcoin, same different. These are all markets. They all do the same thing. They're all trying to achieve the same thing out of you. They want your liquidity.
Yep. And thus, from this, we can possibly deduce that we are going to continue to run it hot for a little while until sentiment improves, right? We're going to keep beating them until they comply. And by that, I mean we're going to keep running it hot until they're willing to step in and buy the dips. And that is when we're going to be ready to start to see this distribution and start to see this top come in. And that's why I still think this parabola and this blow off top is likely, because like I was saying over and over again, the sentiment's just it's not convicted enough yet.
So do you have a comparison as to the sentiment you're looking for in that? Like, are you talking .com bubble type of sentiment, or 2021,
or even go back to the lows of 2022? I saw nobody that wasn't posting 2008 fractals, right? When we were at those lows in the summer, it was in July, and then we made another kind of retest around October. Everyone and their dog was posting 2008 fractals, right? Everyone was doom posting. Everyone said we were only halfway down and we had to go lower. And I was like, I've never seen such a one-sided trade before. Never seen it. And then the hint from the market was when we set the October lows, the lows were marginally below the summer lows in October, right? So that told me that we were running out of steam, even though everyone was super convicted and dumping their entire portfolios, and we were going down another 50%. And that's what I'm looking for. I'm looking for completely one-sided sentiment. I'm looking for everybody to be thinking it is ridiculous to be bearish and we're going up only forever and there's never going to be a recession again. And this is the start of a new paradigm. And that's what I'm looking for in terms of the sentiment to be just insanely bullish and insanely one-sided.
We're already talking that we've achieved the soft landing. That's already starting to propagate.
Yeah.
Soft landing is here. This is good job, Federal Reserve.
Yeah.
As if the Federal Reserve actually cares about your well-being. They are owned by other banks. They care about their shareholders. That's it.
Yeah, 100%. And so, with all that said, could you lead us into chapter 3, perhaps?
Chapter 3 was the wave theory.
Chapter 4 then?
chapter 3 was wave theory. We kind of just went over that. The wave theory, like Elliott wave theory, kind of goes with the market symmetry that I was kind of depicting there, where I look for patterns to repeat.
Yeah. So we've done a
And
good
these
job.
patterns repeat over and over.
Yeah,
Yeah.
we've done a good job at laying the foundation, right? We've got a long stretch cycle. There's multiple targets to point to this sort of 44K-ish level for the Dow. We've built quite a decent case for wanting to see an increase in bullish sentiment and higher prices in order to drive the liquidity to let these big players out and see that distribution come in. And so then what happens in chapter 4? Remind me.
Is that the or is that the time? Those were the time cycles.
Yeah.
I
Okay.
must say that was earlier on in watching your videos, so it's a very crude depiction of time cycles.
Sure.
But I mean, you just look at when the cycles come out, and all I did for that chapter, there's a cyclic lines. You just take a low, it's that low, and you go to the following low, and you just see where do the lows come in. Nope, those don't line up. And this is basically all I do. And you look at that more on the monthly or 3-month chart.
Yep.
Is what I did. And I was like, well, if we're expecting like an 18.6-year cycle, if you've researched that, then you'd see we're looking for a real estate cycle low sometime 2029. So we'd expect some kind of downturn for 3 to 4 years going into that. But yeah, just very rudimentary cycle low there, another cycle low. We've got lows that show up all along those lines. This one a little late in the cycle. I mean, we're talking December 1st, 2028, 2027, late 2027, maybe.
Somewhere in that neighborhood for a
Become
major
late.
low. Yeah. Yeah.
Yeah, and this allows for whoever's running this to get people optimistic and then get people very pessimistic.
Yep.
Like you always depict in your videos, at the cycle lows, extreme negative sentiment.
Yep.
Do not buy this market. This market's going way lower.
Yep.
And this is just very, very crude way of, finding the cycles yourself. Just looking at these things repeat. Look, there's boom, boom, boom. It just, why does it keep doing that? And if it does keep doing that, why would that change? So I started looking more into the timing of markets over the past, I'd say a year and a half, getting into some GAN theory and stuff like that. It's a little more than just this. This is just very, very basic. But it is helpful to see what's going on. And you can do this in all markets and be like, well, there's a cycle low there, cycle low there. There's a cycle low here that shows up in 2030 something. Oh, just before 2030. That could be our next cycle low. It's definitely possible. The more you study this stuff, the more interesting it becomes, in my opinion. Not to say that it's definitely going to happen, but as a trader / investor, we look for the opportunities in the charts. Where do we see opportunity? And a chart that looks like this, I see opportunity down here after taking out this liquidity down here. If that happens to come around this timing, hey, that's even better. It lines up very, very well. So given the cyclicality of these events and what's happening, we could potentially expect this to be imminent topping formation happening to come into the cycle low sometime 2028, 2029. So that's why you want to be on the lookout for that. And if it does capitulate, like down to these areas, down to like 9,000 on the Dow Jones, and people are that panicked, and you're going to have something change in the world. Like 1929 and the Great Depression changed the world for the better or for the worse. It definitely had an impact on the entire world. People changed the way of doing things. A lot of people didn't want to invest in markets until the 1960s, 1970s. It was seen as a scam. Now here we are at the highs 30 years later. It's like everybody must be in the market because that's the way people get wealthy.
Yep.
You know?
And I
So
think
then,
that there's a 4 year cycle that exists in particularly for the S&P, but for the Dow as well. And that to me as well tells me that we're probably going to see this major low come in sometime in the next, I don't know, year and a half, something like that, which tells me that again the top is probably not too far away.
I'm not kidding. Year and a half puts you at 20. Next cycle low for Bitcoin be 2026 area.
Yeah, the end of 2026, and then around, yeah, maybe slightly later for the S&P 500.
Yeah, I would expect Bitcoin and gold to bottom out first. That's generally the way they work with liquidity.
Yep.
Those are the ones that kind of sniff out the liquidity first, probably 6 months to a year before the S&P 500 would start opening up credit facilities, if you will, like borrowing becomes a little easier thereafter after the injection of liquidity by the Federal Reserve or the government. There's a lag effect there
Yep.
that it takes to run down. Basically, we're all just downstream of the shit rolls downhill, right? So,
Yeah, and I'm noticing when
we're done for.
I'm noticing when you wrote this, I know it's about 6 months ago, the DXY cycle, 3 year cycle low was not in at the time, right? But when you fast forward to today for the Dixie, the cycle low is I think probably in, and if you're in the camp of people that thinks this thing's about to roll over one final time, then the 3 year cycle low should be well any week now, right? Sometime probably no later than June, say. So either the
Mhm.
3 year cycle low is in or it's about to be in, and that to me is interesting as well. It's like right when we're kind of looking at the charts and the charts are sort of suggesting that we're probably going to see some kind of major top come in across all of these risk assets. We also either have the Dixie leaving behind a 3 year cycle low or about to roll over one final time and find a 3 year cycle low.
Yeah, and that would okay. So let me do some drawings here on a weekly chart. Take a screenshot here on the Dixie because this is very interesting and it's kind of throwing everybody for a loop, if you will, like getting everybody offside. They think U.S. dollar index going up means risk assets go down. Not necessarily. The way I'm looking at this, I mean, you've got your lower low, lower high, lower low, lower high, change in behavior right there.
Yep.
Look for the change in behavior. So this is top of the box, top of the range. We're still holding the top of the range. Technically still bullish on a macro sense. And this wick right there is what I'm expecting before either pulling back and breaking the lows or just continuing up. So this is basically doing this thing again. It's basically repeating that pattern.
Yep.
It just looks like a reaccumulation again. It is possible that it just somehow goes up to there, right up to that wick where the breakdown was, and from there you fall off. And if you fall into this area, that becomes danger town for the Dixie. Not what I'm seeing. I think this thing is just going to go up. Why is it going to go up? Because of I think it's chapter 5, the debt.
Yep. The ticking time
Leading
bomb.
right into that, but it's a time bomb. I mean, if you look at Treasury yields, if you could pull that up in a bit,
Sure.
the Treasury yields are going up, which means the debt is being devalued currently because there's just too much of it. The supply is coming on the market, and the more supply you get of U.S. Treasuries or debt, the higher this is going to go. The more valuable the dollar is going to become as the Treasuries are devalued. And seeing as that's the largest market, the most liquid market in the world, that takes precedent over your risk assets. So the liquidity coming out of the bond market, people selling bonds, we've got a lot of sellers of bonds since 2021 when the Federal Reserve said we're going to start running off our balance sheet. And immediately I thought, who are you going to sell it to? You're the buyer of last resort. So just like in any financial market, the market maker i.e., the Federal Reserve, has to generate that liquidity. How do they generate that liquidity? They raise interest rates. That puts pressure on global economies, and those global economies seek a safe haven, which has, over the years, been the U.S. Treasury or the U.S. dollar or U.S. equities even. So they're able to offload their balance sheet in a massive profit because they bought back in 2008, 2009. I think. I haven't actually looked at that data, how that all shakes out, but I'm guessing they've marked it up quite a bit, and they're selling it off to appease their shareholders.
Yep.
To generate that liquidity, they put pressure on global economies, and those sovereign nations buy the U.S. debt, and then they're left as bag holders in markdown phase. Now, that would be what I've dubbed the heist of the millennium. It's the biggest debt scam Ponzi that the world has ever seen since Rome. It's just crazy to think about. Trillions of dollars getting exported so that, so 2025, the debt ceiling gets renegotiated in the United States sometime early 2025. Who's to say they won't just default on it all and be like, you know what, this is getting out of hand. We're not paying it. That would be, wow. That would really, really move markets. Like, the debt market could totally collapse.
Yep.
And you'd have risk assets blow off. You'd have potential hyperinflation or the dollar strengthening beyond belief, hyperinflation everywhere else. Scary, scary things to think about. The charts are kind of saying it's possible that this dollar strengthens with the bond market moving down. And if the bond market's moving down, you're pushing liquidity into risk assets, you're pushing liquidity into gold, you're pushing liquidity into US dollars. I mean, just about everything.
Yeah, and that kind of leads us nicely into chapter 6, right? Because you had a quote in here, and I absolutely love this, when you were talking about how, I mean, first of all, maybe we'll talk about that. So when we price these risk assets in these dollars, right, and then the temptation is to say that we're making money, right, because the dollar value is increasing.
Yeah.
But then when you adjust for the inflation rate, right, only Bitcoin and big tech have actually made you money, right? Sure, the number in the portfolio has gone up, but inflation adjusted, only Bitcoin and big tech have actually outperformed. And so you had this line in chapter 6, which was, it reminds you of the Matrix movie when Morpheus asks Neo, you think that's air you're breathing now? And you said you think about it in terms of the stock market, right? Like, you think that's profit you've made? And I thought that was just a fantastic line because it sort of captures this perfectly, right? Like, everyone is seemingly happy with the results because the number goes up, right? You think you've made money, but the money you've made doesn't buy you any more stuff, which is like a really, really interesting spin on this whole thing. So I'd be interested to get you to expand on that just a little bit.
Yeah. So you have a devaluing currency that everybody's still chasing. Like, you want to make money. Like, that's on the mind of so many people. I talk to just about everybody I come across when they see how well I'm doing in financial markets. They're like, all right, show me, what do I put my money in to get the fastest return as quickly as possible to gain the most money? I'm like, well, it doesn't quite work like that. But I mean, I have a few trade setups that you could try, but there's, of course, invalidation and you could lose money. But they're all chasing the almighty dollar. And in chasing that almighty dollar, the people that issue this product, that is the US dollars, they know this. They know people are chasing it. They've done a very good job marketing this and pushing it. So they get people to chase after it, to acquire it, and focus their life on it. You go work your 9-to-5 job. You're aiming to get dollars to be able to purchase things. We trade financial markets to get an edge, to get a little bit more of these dollars so that we could spend them on things. But if you're devaluing it, then we're just running on a treadmill. I mean, we're not going anywhere.
Yeah.
We're not gaining in purchasing power. And at the same token, you file your taxes, and they take their capital gains tax. Long-term capital gains tax is 7% around here. Short-term for like traders is like 30%.
Yeah.
Have you actually made money, or have you just run on the treadmill and essentially took a loss? I mean, really. Well, it's fun to play in financial markets if you know what you're doing, but you really have to outperform if you're going to stay ahead of the debasement,
Yep.
the extraction, the tertiary extraction. It's just hitting you from all angles, and the government is taking advantage of the fact that people chase after this dollar.
Yep. And you showed in this chapter 6 that when you do the Dow Jones divided by the money supply, it's been sideways since 1959.
Yeah.
Which really puts that into perspective, right? Like all those stocks, and with the up only chart that we showed right at the start, that massive uptrend bullish channel, and yet adjusted or divided by the money supply, we have completely sideways.
All scam.
Yeah, forever.
It's all fugazi.
Yeah, absolutely.
They tricked me.
And even gold, right? Even gold is the same thing.
Yeah.
And
gold is potentially going to be putting in an uptrend though versus that soon.
I am incredibly bullish gold over this decade, but based on historical performance, yeah. I mean, look at this. I mean,
well, this actually looks really good on a weekly chart for gold.
Yeah.
Wow. Boy, how things have changed. This is a trade setup, my friends. Where's my rectangle right there? This, I don't have the volume profile, which really irked me when doing Wyckoff, but there's your Wyckoff analysis right there.
Yep.
That's an accumulation versus the M2 money supply, and gold could really do really well.
And that makes perfect sense, since the central banks have been buying as much as they possibly can ever since the last sort of 4 years.
Secondary test,
spring,
and here's your SOS.
Yeah.
And back down here, back test, markup phase.
Yeah.
That looks gorgeous, man. Gold.
Yeah.
People are sleeping on gold too, man.
Say again?
People are sleeping on gold, thinking it's grandpa's money.
Yeah. I've been trying to tell them.
I've
been trying to tell them, man. I really have. I'm sure you know. But yeah, gold always knows something. When it breaks out above all-time highs, that's not nothing. And yeah, I'm super excited to see what comes out of this. I think gold is... People that are sleeping on gold now are going to really regret that, I think, by the end of the decade.
I see that. Let's see what this chart is even doing now. Gold. And get some projections for gold. This all has to do with everything that I'm writing. It basically says get yourself some protection. You have to protect yourself from what they're doing, and Bitcoin is a way to do that. Bitcoin can very easily be a captured thing to get us ready for super surveillance finance. I mean, it's basically set up for it. Where gold, harder to transact in. There are some down or some faults that you have with gold, but it still has its merits. Where Bitcoin excels at certain things, gold excels at certain things that Bitcoin can't touch.
Yep. 100%.
And that is the physicality of it. You physically can hold this. Good luck getting it from my cold dead hands.
Sure.
Yeah.
And this as well, I find what's most interesting about this breakout is it's going with the stock market and risk assets, right? That's what's even more curious about this to me. This is a breakout that to me says this is more of a canary in the coal mine, right? This is like an early warning sign, if you ask me personally. I don't think this is something to be slept on at all.
It certainly can be. I think I was sharing a chart with you, which I actually called the top on gold back in May of last year pretty well. And I think it was, this top, I called that one pretty well. And I thought was that the one? No, it was this one.
Yeah.
That liquidity grab. I called that one pretty well, and I was like, that looks like distribution. There's your upthrust. That's all you get.
Yeah.
Invalidation of a break above that. Well, what did it do? It broke above. And it's like, okay, that's different. Was not expecting that. And in markets, after you've grabbed the liquidity from the range, you should not revisit that unless if you're about to push way higher.
Yeah.
So I think you were on your channel saying the same thing. As soon as that broke above, it's like, okay, we need to look for a cycle low. This is not distribution anymore.
Yeah.
This wants to go high.
Yeah, I was looking to short gold, thinking there was going to be a nice deep weekly cycle pullback, and then, like you say, the next thing you know, we break the all-time high, and I was like, oh, okay, like gold is trying to tell us something here, right?
Yeah. I
And I
was
don't.
matching that and then just had one more leg up, and that's what this was for me.
Yeah.
And guess what it did? It just kept going. So that invalidates that. So now these are going to repeat somewhere in the future. So the way I would look at this is this one, this is going to repeat up here. This is going like that. Then you repeat that. Then this leg repeats. Then you get this. Then you get this. And it could really keep going here. Not financial advice, of course, but yeah, this is a bullish chart with the potential for overperformance because it's been slept on for so long.
Yep, I agree 100%. Do you foresee a shakeout if we get the assets, the risk assets like the stock market and Bitcoin top out? If we get this, this idea of ours that we get some kind of blow off top, perhaps, and then some kind of
Yeah.
bust. Do you think gold suffers in that bust? Do you think it's first to recover? Or do you think it's immune to this? Do you think it... Yeah, let me know what you think. I'd love to know.
This is so we want a more of a macro here. I mean, previous range. There's a spring, and we didn't get a show of strength until here. Are we in markup phase, or is this just a push up before deflationary bust? This may be your buy point. It is quite possible that gold does suffer. So in the chapters that come after, I think the digital dollar, the beast of the dollar or whatever, says that is likely to happen. If we were to come up here, I mean, I'm thinking we were going to make 3K, 3,500 to just make this pattern, something like that. And then the deflationary bust could be so bad that, yes, it takes the liquidity out of gold, comes and grabs this liquidity, and back tests these highs for the ultimate shakeout. And that would be flooding everybody into those US dollars in order to implement that, to switch over to a digital system, and then you're locked in.
Sure.
And then when gold would be around these range lows, you're not going to be allowed to buy it. You're going to be locked out. Sorry, we don't offer that. The digital dollar is non-convertible to precious metals or Bitcoin or anything else that'll help you escape from the system, because they need you to be bag holders of their dollar, the dollar that they're going to devalue into perpetuity. So then in Elliott wave terms, you're talking 1, 2, 3, this is 4, we're working on 5. You get an ABC pullback, and that is just wave 1 of a massive currency devaluation.
Yeah.
And you're talking $18,000 to $20,000 gold.
Yeah.
This could get really, really ridiculous, and you won't be able to buy it. You're not going to be allowed to buy the moves. They're going to shut down the exchanges, same way they do in crypto now. Coinbase just happens to go down, at these cycle lows, and like, sorry, Robinhood, I think, went offline recently. Sorry, we disabled 24-hour trading temporarily at these lows. Sorry, you can't buy your mining stocks.
Yeah.
Who's to say that they won't do that at the at the brokers, at the larger brokers? Charles Schwab just says, sorry, that could also have to do with the banking hack or whatever, the cybersecurity. Blame it on that. Russia hacked our stuff. Sorry, but your pension is worth nothing and you have no ability to transact to get your assets in or out of there by the dip, whatever. Sorry. And they mark it up to, from a dip down to $1,500 on gold, they mark it back up to $4,000. They're like, okay, now you can buy.
Sure, sure. So, what do you think the solution is? What do you think about places to hide or ways to protect ourselves from this kind of thing?
Nowhere to run to, baby. So where do you hide? Well, they've brainwashed us. I've been given this thought over the past couple of weeks, like, because people chase the dollar so much, we're looking at preserving our dollar value and not looking in terms of purchasing power or even valuing things in gold. So with that brainwashing, it kind of takes to your psychology to steer you in the wrong direction to preserve capital. And you're not going to want to see a drawdown on your gold holdings from 3,500 down to 1,500.
No.
You're not going to want to see your Bitcoin value go from 150,000 down to 8,000. So you're going to be like, well, I'll just sell it. It's like, that's what they want you to do.
Sure.
So unfortunately, I think with at least a portion of your purchasing power / capital, I'm going to ride it down.
Yeah.
At least a decent percentage, thinking that we will be blocked from purchasing the lows,
Sure.
getting back in. Because I just don't see them. If they're going to mark up gold to 30, 20, 30 grand, you think they want you to buy 1,500? If they're going to mark up Bitcoin to $1 million, $2 million, you think they want you to buy that even 30,000? No, they want you to exit. They need you out of there.
Yeah.
So how do you stay safe? Stay level-headed and prepare yourself for drawdown. I think get prepared. Get some, if we're trading financial markets or if you have investments, take some profits, definitely. Buy things that you need, maybe a generator, maybe a car, maybe some real estate where, not necessarily profit off of, but it's an escape. I have some little nest egg over there out in the prairies that, that's going to be my where I protect myself.
Sure.
Have a portion of it in gold. Sure, it goes from 35 to 1,500. In the next 20 years, you're going to say, it was. I'm glad I bought $3,000 gold.
Yeah, yeah. So, what do you think the probability is that they actually do shut it off within, let's say, within the next 2 to 3 years? What do you think they actually do seal the on and off ramps? Do you think this is a high probability, or is this like a worst case scenario, right?
I'm leaning towards more probable than not.
Okay.
Just because of the problems in the whole financial market. Everybody knows the wheels are falling off. This wagon train it's derailing. It's getting pretty bad.
Yeah.
And gold is telling you that. The people that are buying gold up here, there's no more supply, so it's pushing up. They know something's coming. I think they have so much money. It's like, I have cash. That's fine. This can ride down here, and I'll try to buy some more. If I'm not allowed to buy some more, I don't think that we're going to have gold be, $900 and stay down at $900.
Yeah.
They would see the same thing in the future. I mean, Mark Zuckerberg, Jeff Bezos, they've been actually selling shares of their company, which is quite a change in behavior. Usually they borrow against their assets.
Sure.
To not incur the taxes. Now they're just like, yeah, I don't care. I'll take the tax hit because I need liquid cash. What are they putting it into? I would think gold and Bitcoin.
Yeah, I would think so
property.
too. Yeah, yeah. Hard assets.
And it's just put that off to the side. I mean, maybe it never goes down in value, or maybe they have, like I was just showing, like potential shakeout to get retail out, entirely out, and they might hold it down there for a while. Like
Yeah.
if they hold the price down on gold down $1,500 for like 7 years, no more interest in that. And then somehow people are either blocked from getting it or they don't want to. There's no desire. And they just start printing and devaluing the currency, and they're just, well, I guess we're stuck. Have your
Yeah.
options open. Where's the safe haven? Have your options open.
I agree with everything you said there. Apart from, I think the time frame is slightly different for me. I'm leaning more on that we are going to see all of that towards the end of this decade. I think this deflationary bust initially, I think the bounce is going to be playable. I don't think they're going to fully seal it off. I mean, I could be wrong. I'm certainly not saying I'm right, but I've I could see us being able to have one opportunity for the people that are switched on. And remember, it's easy to kind of sit here for most people and say, oh, yeah, if it dips, I'll buy it. But the reality is, if we do have this deflationary bust, right, if we run it hot for the next few months and then we have some kind of big crash and Bitcoin and the stocks and gold, everything is tanking at the same time. The reality is most people will be in panic, right? Most people will be in fear states and most people will not be looking to actually buy that dip. So I've kind of been leaning on the side that there will be an opportunity to get in. There will be, for those of us that have a plan ahead of time, for those of us that are kind of semi-anticipating it, I've got a funny feeling we are going to be able to take advantage of this dip. At least that's certainly what I'm hoping. But I absolutely agree with what you said in terms of, land and gold and Bitcoin and physical assets that carry no counterparty risk and having a backup plan and all of that kind of stuff. I completely agree with you. That's exactly how I've positioned myself personally as well. But I I have a funny feeling that that whole sealing the exits and CBDCs might not come until post 2028. So I'm open to being proven wrong as
I could
always.
definitely, yeah, I could definitely see that happening as well. But you just said something that kind of rings a bell is the counterparty risk.
Yeah,
So we have the debt bomb that's ready to explode. I mean, it could wait until 2028 to explode, but if it's happening and they're going to devalue the debt, sovereign nations start dumping out, then you have these banks, regional banks, or even larger banks in the United States that hold a lot of treasuries. That's their like main holdings is debt and treasuries. I mean, it's all debt.
yeah,
So if you have a devaluation in that debt, well, there's your counterparties right there. It's all the banks. If the banks go down, you have no way to shuffle your money into these exchanges to either buy the gold, Bitcoin, or even buy property. You're not going to be able to transact very easily. That kind of leads to the thinking of in a current deflationary bust, if this goes on, banks will be shutting down and it might be good to go like next year.
yeah. I could see that too.
And all the it's definitely, and we're just going to play it one day at a time, and we'll know when the internet gets shut off and we have no more communications. Well, we were warned ahead of time by a select few people that are switched on, and hopefully people heed the warning and realize what's happening and prepare yourself mentally for it.
Sure.
Because if communications go down, the internet goes down, you need to be thinking, okay, this is all planned. Why is it happening? How do I proceed? Uh, so that, yeah, the counterparty risk says that we may not make it to 2028, 2029 for the off ramps to be closed. It'll seal up before you expect,
Yeah.
but not as soon as you expect. I mean, that's the way our markets work. It's like, I'm expecting this leg to go. Like, no, it's going to make you wait a month. Okay,
Sure.
I'm expecting this target. No, it's going to front run your target.
Yeah, yeah.
It happens to us all the time.
Are you aware of the Basel 3 implementation? I've got a question in the chat asking for your thoughts on that.
Basel 3, I follow so many of these.
I think
Um,
I think this is where they made gold a tier 1 asset, if I'm not mistaken.
yeah, there's some like XRP people that are talking about that. And you would have compliance with certain ISO something something, these tokens, which you could have tokenized assets. That could be a possibility. Um, Basel III would be a renegotiation of the monetary order, really. So that would happen in a currency collapse.
Yep.
So check something out. I had a thought, and this is on a quarterly chart, probably would be the best. In the event that we have a total currency collapse, if we do move, if we're wrong about the deflationary bust, and we have a currency collapse instead, which actually I think could happen very easily, as we have a deflationary bust into a currency collapse. It could be a 1-2 punch.
Sure.
But the target, as per Elliott wave, would be this liquidity down here, retesting wave 4 of the lesser degree. And that's around 8,000 on the Dow Jones. So what about this goes up to 80,000? And that is when your currency is just getting depleted so horribly that they just say, you know what, we're going to implement a new currency. We're going to value it 10 to 1. And you start here. And then there's basically no change to the economy, not very much anyway. Markets don't necessarily collapse, they just get repriced overnight. And that would be like the Basel III implementation type thing where we just have a new currency.
Yep.
And the charts would make their waves. They get out of their debt, pay off with a devalued currency, and then a new currency is implemented, valued 10 to 1. And here you go, wave 3, wave 4, and then we move up for wave 5.
And we just lock the zero off and pretend like everything's okay again.
I mean, that's the way that currencies work, though. That's like hyperinflation in Venezuela, Argentina.
Yep.
They're just, trying to take zeros off. Zimbabwe had that.
Yep.
And then you have to re-implement a new currency. Usually it's backed by gold.
Yep.
And they just start the whole rigmarole over again,
Yep. Yeah.
So there is a potential for that scenario to happen where you do have an inflationary bust. Your currency is just worthless, revalued 10 to 1. That's not on anybody's bingo card like that.
No, I mean, I think that would be harder to deal with in a way. I don't know about you. And then it goes back to that thing about you think that's profit, right? I mean, yeah, sure. Like we got an 80,000 Dow, but it's not the same 80,000 that it once was, right? In this scenario, this is even worse. This is a currency you literally don't want to hold anymore.
Yeah, and they're just using it to pay off the debt. So there's a British guy, Clive Thompson. I've seen him on YouTube quite a bit, and he talks about the reset, and he's got a great view. I would definitely recommend people listen to what he's saying. He's an ex-banker, and he talks about the implementation of a new currency and how you would have it revalued differently. Initially, it would be 1 to 1, but eventually they kind of disincentivize the use of cash and move you into a digital system, because the old cash, which all debt worldwide is denominated in this US dollar currency, the current iteration, and that would just get devalued alongside the debt, and the new currency doesn't have any debts attached to it.
Yeah.
So you would have the opportunity to expand an economy very aggressively from doing that. So I wouldn't put it out of the question to say, hey, we're just going to reset the currency and start with a new system. The debt kind of dies with the old currency, but then you have the asset holders of that debt. That's an asset on their balance sheet. They kind of become the losers, but maybe they dump their stuff, and it's a huge devaluation of debt. I mean, there are so many patterns that I'm seeing on the chart that just say things are going to get wonky, and it's not going to make sense to people. Similar to the way 2023 did not make sense, that we're going into recession, though markets keep pushing up higher. It's like, well, now you realize, hopefully you've learned, markets are not the economy.
Yeah.
The markets are a pricing mechanism. That's all it is. The economy is something totally different.
Yeah.
And hopefully people learn that lesson. And you could have economic expansion and the stock market going down because things are getting deflationary. You're getting more efficiency in your economy that pushes prices down. Deflation,
It's going to be a wild year. It's going to be a wild
How
year.
lit up is the chat? I can't see the chat. So how are we doing in chat? How many people are in there?
I can't see how many people. Wait, have a look in here. We've got like, I think it's about 200 and... Oh, wait, hold up. Yeah, 242 right now.
Dude, you're making me famous.
Yeah.
I've got like 400 followers on Twitter now, and it's just like
Well, you deserve it, man.
I'm
That ebook was really something. Do you want me to
I'm
ask a
not a
few?
guy that wants to. I'm not the guy that wants the spotlight, though. I'm more of a back in the cut. I'll just think about things, and I'll let you know what I think. But I don't
Sure,
need no
sure.
spotlight.
Yeah, I get you. I get you. Do you want me to? Do you want me to ask a few questions, and then maybe we can put some summary statements in here, and if you
Yeah,
want to come back on at any point, just give me a shout. I guess.
yeah. I guess we'll tell people that if they have questions and think about things in the future, just comment on this video or on the Twitter account for either one of us, and just ask questions, and we can save them up and make this a regular occurrence where I come back on and
Yeah, for
we'll
sure,
talk
for
more
sure.
markets as things progress.
Yeah, for sure. It'd
And
be really
I
interesting to
respect
check
I
in.
respect what you do.
Oh, thank you. It'll be really interesting to check in a few weeks' time, perhaps, and see how we're progressing. Right, see if we've entered any third angles, or yeah, that would be really
Yeah.
interesting.
Nice trade setups, hopefully on a weekly scale. And when we see a weekly close lower low, it's like we are going to change our outlook very quickly, and be like,
Yeah.
that's a change in behavior, friends.
Okay, so Ken, I'll ask you a few questions. Someone's saying, where can they find you on Twitter? Your X, it should be in the description to this. I've put it in the description, guys. So if you just have a look in there, you should be able to get a link, an app for Kamazabi's Twitter page. And I have a question somewhere. I've just lost it. It is, how does all this affect Bitcoin and its future? Do you want to take that one?
Wow. There are several things that could be happening to Bitcoin. The whole world is moving digital. We're all very, very well aware of this. Bitcoin can be seen as a digital representation similar to gold. It's not gold, but it has properties that can be similar to gold. I do see a future in Bitcoin. I don't think it's going to die. I think there's always going to be some people that see value in it, whether it's El Salvador or even new onboarding countries. I mean, if you're talking price targets on Bitcoin, you have to be bullish on that up only chart.
Yeah.
Just looks like it's just it's the apex predator, as Camel said.
Yeah.
It's taking everything out.
Yeah.
And we need to expect the same thing until the charts show us otherwise.
Yeah.
Until capital flows are flowing out of Bitcoin. Because like you have, let's see if I have the BLX chart here. I don't know. There it is. I mean, that's just a monster. We might have some distribution here going on from people that got in really early, and that's just people wanting to take billions of dollars to buy yachts and stuff like that. I'm totally fine with that.
Yep.
This is just higher highs and higher lows.
The whole way up.
Now, I was concerned when this closed lower than there. That was like a weekly lower than close, and I was like, well, maybe we get a lower high. It's quite possible. I think JT on Twitter was kind of thinking the same thing. Like, it's definitely a real possibility that this just ABC and comes back down to wave 4 of lesser degree.
Yep.
I think that would be the ultimate shakeout if we were to get back down into the 2018 region. There's a lot of volume that accumulated there. I think you'd be lucky to get it back down there. Not to say it's impossible. I think that's definitely anything underneath that 15,000 from last year is a buying opportunity if it gets down there.
I'm not sure we can go there because of the mining.
Yeah, I keep telling people this. They're like, oh, I'm still looking for that 8K, 9K. I'm like, that would concern me if it spends any amount of time down there. If it's a quick liquidity grab and then bounces back up,
Yeah.
I'm good with that. If it hovers down there,
It's
I think you
dying.
had mentioned this in one of your videos. It's a failed experiment.
Yeah. Yeah. Exactly. Yeah.
moving on to something else, which
especially
El
now because
Salvador would be.
yeah, especially now because we've halved, right? And so now across all
Yeah,
miners, the average price to mine a Bitcoin is what, 36K. So the moment we trade below 36K, now a great deal of the miners, the less efficient ones, start to have to go bust, right? They start to have to switch off. And that's fine in
yeah,
the short term because it just means hash rate is handed over to the more efficient miners, right? That's fine. But
yeah.
we start to trade sub 30 and then sub 25, like all of a sudden, the vast majority of miners aren't profitable anymore. And when we start talking about these sub 15K or 10 or 8K levels, then, like you said, this is a failed experiment at this point. So I really hope that,
It leaves it vulnerable to attack. Yeah, you'd
yeah,
be leaving the network vulnerable to attack with the miners shutting off if they're not profitable anymore. And
yeah,
that could be the whole idea that BlackRock has to kind of take over and make a new type of Bitcoin or whatever. Maybe that's what they're doing.
yeah,
And they
maybe,
want to use their customer funds to buy up as much supply as they can so that they have control of that portion of the network.
yeah.
And you just sell it all and go into something else that's way more profitable for them. We don't know what they're doing with it. I
Yeah.
don't trust them.
No, I don't trust them either. I don't trust them either.
Move down. What is this? 26K. I mean, 30K should be your base.
Yep.
I mean, if we're just talking halvening prices and stuff like that,
Yep.
2018, 2019, we had a base around 6K. Now we've got a $15,000 base. Below that would be pretty crap unless it's just a liquidation wick
Yep.
and close back up on a weekly basis. But if you start closing like a monthly candle down at 8,000, I'd be wary of it. You get a bounce back and it just becomes a trading instrument, a pump and dump most likely. So then I'd be really cautious. I'd also be heavily into gold at that point because in my estimation, we would have one or the other. One of them is going to eat the other one and become basically the future of finance. And Tyler Jenks speaks about this on Hyperwave YouTube channel. He speaks about a $10 million Bitcoin. And he had 5 scenarios that he forecasted back in 2018 where gold is the most likely scenario, but he preferred the Bitcoin standard just because it made more sense moving into digital.
Yep.
But his hypothesis was, and this is a dude that's been in financial markets for 40 years, and he's an advocate for sound money. And he said, well, you'll either get a $10 million Bitcoin or Bitcoin dies, and you have gold that keeps doing what gold's been doing for thousands of years.
Yep.
So yeah, don't sleep on gold. Bitcoin is an opportunity, but it goes
gold is
back to that
gold.
whole chasing dollars thing. Like, I want to make money with Bitcoin. It's like you're missing the point of Bitcoin then.
Yeah. Yep. 100%. Yeah. Yeah. And gold is gold, right? Gold is God's money. Gold is thousands of years of proof, and gold is they're not. I've said this before multiple times on my channel. If you think the central banks are just going to throw their gold in the sea, like I want whatever you're smoking, right? Like there's in my humble opinion, there's no shot that they're just going to throw that gold away and decide, oh, actually, I want Bitcoin, right? As much as I love Bitcoin, I love Bitcoin more than anyone. But if you think the central banks are going to just decide to throw their gold in the sea and they don't need that anymore because Bitcoin is here, then I don't know, man. I don't know if I can subscribe to this as an idea, but I certainly think both of them have their place, and I certainly think, as you said earlier, that Bitcoin can do things that gold can't, but equally gold can do things that Bitcoin can't too. So yeah, I think both are worth having. There's certainly some upside for Bitcoin, I'm sure of that, and I think longer term there's
Well, that's
gold.
the asymmetric bet of the technology along with the sound money.
Yeah,
Is kind of what you're getting. You're getting a tech stock with sound money kind of implications in there. Whereas gold is sound money, been sound money for a long time. It makes a sound if you drop it on the ground. It's sound money.
yeah,
And Bitcoin is a tech play on this sound money. It's technology. It's a new invention. It could have much further to go, or it's, as we'll see, it was a failed experiment. I'm optimistic, and I hope that people realize what they have, the opportunity that they have, not to make dollars, not to make money. This is not a money-making scam, some kind of shitcoin. Some people call it the ultimate shitcoin, and it's like, you're missing the point of Bitcoin here.
Yep, for sure.
It's
For
a
sure.
real opportunity.
The point of Bitcoin is, of course, the non-confiscatable, uncensorable money with no counterparty risk, right? So long as you cold store it, so long as you hold it yourself. So yeah, it's kind of a shame to use it to get more fiat, which we know is going to be worthless or worth
If
less
they are
at least.
psyoping this, yeah, if they are psyoping all of this, they can easily change the perspective of Bitcoin, even though it is an opportunity and it is the wave of the future, and it could really progress into something really good. They can just turn it into a narrative where, yeah, this is just a pump and dump. It's just another shitcoin. You should have bought SHIB. You should have bought Doge. It's the same thing. It's like,
Yep.
no, it's not. But you're convincing everybody that it is. You ruined it. That could be their plan, because I mean it's a threat to the U.S. dollar. It's a threat to the financial system. It's your escape. It's a way out. I mean, just getting involved with Bitcoin and researching it kind of leads you on the path to learn about all this debt and currency debasement and all the stuff that I've written about.
Yep.
It kind of leads you on that path. And like, if nothing else, it's a teaching tool. It'll teach you that your money isn't there. Your money's worthless anyway. The money's not yours.
Yeah, 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 exactly. And they can just create more. I always think about this. It makes me laugh. Like my mum, when I was a kid, used to say things like "money doesn't grow on trees," and then some point later in my life as an adult, I found out they can just print it out of thin air, and so it essentially does grow on trees, right? It has no worth.
It's worse.
Yeah. So yeah, I don't know. But yeah, if anyone's got
What
any
kind
more
of currency do you use? Do you use euros over there where you're at,
oh
or
no,
British pound?
Great British Pound, yeah. I mean,
No kidding.
it works okay. It works okay, but I mean, it was once backed by a whole pound of silver.
Yeah.
And now, like all fiat currencies, it's slowly dying the death of 1,000 cuts.
Mm-hmm.
But that means the pound value of gold and Bitcoin is going up quite rapidly, which is quite nice.
Yeah. If
Silver
you think
lining.
that's profit you're making.
Yeah, exactly. I got another question for you here. What about the theory of cryptos being by them created to drain liquidity that is real assets don't raise in prices? Wait, say this again? What about the theory of cryptos being by them created to drain liquidity is that real assets don't raise in prices? So that real assets don't raise in prices? Robert, can you retype that question, please?
So,
I think I got
you're
it.
aware that the U.S.
I think the question is, what about the theory that that these elites have created crypto in order to function as a black hole to suck in liquidity so that it doesn't raise the alarm of inflation in other assets? I think that's the question.
Yes, well, you have some catalysts that are happening this cycle with an ETF, so that's a reason for number to go up. No cause for alarm. You have a Bitcoin halvening. Oh, prices, going up. Yeah, that just happens in the halvening. It's just part of the cycle. Oh, no reason to pay attention to that. So yeah, you could definitely have Bitcoin, go up to like Arthur Hayes targets of $750,000 and be like, no, it's not inflation. It's just what Bitcoin does every now and again.
Could you see it
think
up
that
as 750K?
Yeah, that's what Arthur Hayes' target is, that BitMEX CEO guy.
But could you see it there or no?
Yeah, I definitely could. If you want to take this cycle right here, I mean, it would take longer to get there. I mean, take that measurement and project it from there, ABC. Your target becomes 1.2 to $3.9 million per Bitcoin.
So maybe I'm not bullish enough, right?
It's possible. Like I said, that bond market is the most liquid market on the planet, and if liquidity falls out of that, it can really do crazy things for markets. And it's not that you're you're probably not bearish enough on currencies.
Yeah.
It could be that we don't have that deflationary bust. I mean, some people are looking for that 2026 blow off top and stuff, and it definitely could be that we're repeating this in the time frame. Trend based, get my trend based fib time. If we were to measure how long the 2017 cycle took, projected from that low, it's just at 2025, middle of 2025.
Yep.
That would run this cycle the same amount of time there. So if they are indeed correct, and the cycle runs the same as 2017, which it can be, I can see it up there. Personally, I would look for the 618 target there. 238 looks like a good target, and that would just be your standard wave 1, 2, 3. This is wave 4 and 5. So I've been looking at 2018 and matching that with the leg of 2022. They're 4 years apart. They both lasted exactly 1 year in time. So I'm matching those two legs. So it is possible that we go first target once the 618 of that leg up there. That would be a good target.
Is that
if it is
230?
uber bullish anyway. Yeah, 230K.
That'll do me, to be honest.
Nah, I mean, look at the channel that I was just playing around here and just drew a channel, and it just happens to line up right there, June, July, August of this year.
Is that August of this year, June? Really... Oh, wow. That's blown my mind. That's right when I expect it to be as well.
Yeah.
I mean, it doesn't mean anything until it happens, obviously, but I like it when, I don't know, I'm sure you get the same feeling, right? Like all these charts are kind of hinting at the same thing.
Yeah.
They're all kind of suggesting that this blow off top might be a thing and that some kind of bust is coming thereafter, right?
Yeah, I don't think they have a choice.
No.
There's too much profit taking. There's too much exuberance in all markets. I mean, worldwide, they're all just melting up. Do you follow the UK 100?
A little bit. Less so.
Isn't that your hometown market?
It is, but going back to 2022, that was my most traded market. And then
no kidding.
By the time we get to 2023, I think I maybe traded it once or twice, and I don't think I've even looked at it this year. But if you zoom out on that, if you zoom out on the UK 100, just zoom all the way out, the thing, all it does is go sideways. And you can keep zooming out for another couple of decades, and it will just continue to go sideways. So, I mean, it's not the greatest thing ever, but I much prefer the cycles on the S&P 500 and the Nasdaq. Those US markets are way nicer, and I prefer to start a bit later. I prefer to trade the New York hours, which is like 2:30 for me, or 2 o'clock sometimes depending on the clocks. But yeah, what were you going to say about the FTSE?
I was just wondering if you were interested in that market and if you thought it was fairly bullish or not. I mean, I thought it was going to cave over from here, but it's making a higher high on the monthly. I didn't see that until just now.
Oh, I did pretty well at calling it from near the lows to near the highs. I did pretty well at calling like the move. I said that it probably would lead the way. And I did trade it a couple of times on the way up, but generally speaking, it's just not something I'm that interested in because, like as you saw, it just ranges, right?
We got liquidity down there at 7,000. This took all that liquidity there. Show strength, maintain that range, pushing higher. Yeah, that's 8,800 or so.
Yep.
That's in GBPs. Let's see what it looks like versus the US dollar. That's even worse.
Yeah, you can kind of see why. And I bet if you divide it by the inflation rate or whatever, I bet if you inflation adjust it, it's just on a downtrend. I can only imagine that's probably the only way it could possibly look. So Yeah, and I mean we had really high inflation at one point during the pandemic as well. So yeah,
Yeah,
this is not a
it's
market
really
for
hit
us.
people over there in the economy. Like, saw some YouTube videos of people who are just like, dude, this inflation is just, it's hard to get by
Yep.
with you know, and you gotta feel bad for people that, you know, didn't study money, you know, 10 years ago or 5 years ago.
Yep.
Because like, personally, I did this back in 2013, 2014, because I lost everything in the financial collapse of 2008, 2009. I lost everything. I'm like, I'm not going to let that happen to me again. I'm going to learn about this stuff because
Sure.
somebody's pulling the string. This is ridiculous. So now understanding money, you know, it did it mainly for investment purposes, but then I started to see the swings on the, you know, intraday here and there. And it's like, well, I could have sold here and bought back here and, you know, pocketed the profit. And that just leads you into, well, trade the daily. There's a 1 hour chart. Oh, let me get in on that. Well, yeah, I mean, just learning how to trade markets, you can go intraday and realize where price is going. Now, it's a totally different market trading 1 hour and under versus trading the daily. And
Yep.
you have to understand the difference before getting there. But yeah, I have my swing trade account and my day trading account that if I see a setup, I'll take it. Why not?
Sure. Sure.
Especially if I'm not doing anything, and might as well pocket a couple $100
Yeah.
day trading. But you got to know what you're doing. And
Day trading,
and
day trading is a different beast. I've never actually been very good at day trading. That's why I solely focus on swing trading. I've never had much luck with day trading at all, really. But
yeah,
yeah,
I
to
had to
each their
learn
own.
from this guy that was just, he is a master at day trading. He just spots the liquidity and sees where the chart's going. And I learned from him. And I was like, he got me down to a 2 minute chart. And I'm trading a 2 minute chart and realizing what's going on. I'm like, wow, this is freaking phenomenal. But much easier, much less stress to just ride the daily trend and stay around the 5 minute chart.
Yeah,
Plus, you really know what you're doing.
yeah,
It
I
works.
was I was gonna say this in terms of the stress levels. One of my friends is a day trader, and his hair is falling out, man. Like, so so yeah, I don't know. For me personally, it suits my lifestyle. I get plenty of free time, and I like the slower pace and let the daily candles unfold one at a time. You know.
Mm-hmm.
But yeah, Kem, thank you so much for coming on. I'd like to wrap it up here because it's getting later and later, and I'm worried this stream's going to be, I don't know, 3 or 4 hours or something. But if you have any closing comments or if you want to shout out any social medias or anything like that, please feel free to do so. And I'd love to have you back on in a couple of weeks' time, and we'll see how price is progressing.
Yeah, I'd like to shout out Jim of All Trades, which he's an Elliott Wave trader. I moderate on his YouTube channel every Sunday night. We go live at 9 o'clock Eastern Standard Time. So I'll be in the chat every night doing that. I'm also part of his Discord, and he does really well with Elliott Wave theory. He kind of taught me the finer points of the Elliott Wave theory. Um, I'd
Did you?
also tell people look into David Allen Webb and the Great Taking. It's a great book
Yeah.
slash YouTube video to see how assets kind of controlled around the world. It's pretty uncanny for me. Um, Clive Thompson, like I said, he's and Camel Finance is a great follow.
Thank you, brother. What was the first channel you shouted out? Was it Jim of All Trades?
Jim of All Trades, yeah, Elliott Wave trader. He's been around for years. Real genuine guy. And I'll be live with him tomorrow night, 9 o'clock Eastern Standard Time.
Yep.
I'll be in the chat. Stop in, say hi.
Okay, I will do. I'll say what time. What time did you say?
That's 9 o'clock, so that would be 3 a.m. for you, bro.
Oh, bro, I might not be able to make it. Please forgive me. But yeah, definitely go and check out those channels. If there's anyone else you want to shout out, please use this time to do so.
Good. I'll make a list for next time.
Okay, cool. And yeah, thanks for introducing me to Discord, I guess. And yeah, I'm sure I'll speak to you soon. For everyone in the chat
Okay.
that joined in and supported this, thank you very much. And I hope you enjoyed it. I hope you found some value here. For anyone that was asking, yes, this will be available for you guys to come and watch on demand or on catch up, whatever you want to call it. So yeah, thanks for being here, and thanks to you, Kem. And if anyone wants to go to Kem's Twitter, that is in the description to this video, so you can go there and check out that ebook, and I would highly recommend it again. So thanks again for being here, Kem. I really appreciate what you do, and I look forward to speaking to you soon, bro.
Cool. Thanks for having me.
Okay, thanks everyone. Take care. All the best. Cheers. Bye.